The other theory that's being put to the table, Shankar, is that going by history, stock markets generally tend to show you a revival, or they lead economic revival by about 6 months on an average. Would you say that's something that's getting reflected over here, or is it more likely that it's quite coincidental that the market has shown you such a big rally rather than that it's pointing to economic revival in the next couple of months?
I mean, that's not a fail-safe theory. I mean, markets might rally 10 times, and only one of those 10 times it might have actually signaled a proper revival. Between 2000 and 2003, the markets rallied several times, but the one final time that it rallied in 2003, April or May, was the real one. But before that, with that theory, you would have been bankrupted many times over. So I don't pay too much attention to those kind of heuristics. I'm not a big believer in pure statistical analysis saying that this is the way it happens, or hence this will happen. Markets don't necessarily believe in statistics themselves. A lot is riding on the second half of 2009. I mean, every single theory that I hear is that things are bad right now, but the second half will be great. And that was exactly, where we were last year in the first half, that the second half of 2000 would be great. And let's be fair. There are some green shoots that you're seeing in the housing market in the US. There are some green shoots you're seeing in rural demand in India. So, we simply cannot ignore all that. There are some green shoots in terms of auto sales, especially for value end of the market like Maruti. All that put together still doesn't add up to, a whole sustained revival. It could simply be because of a poor base effect. You're seeing revival in the US housing market, or for that matter, elsewhere in the world. That October, November, December quarter was so bad in 2008 that just about anything, would look good compared to that quarter right now, which is where probably most of the commodities are. That nobody is saying that steel demand will grow over 2007 demand. They are saying that from the lows it will bounce back, which is, very much, keeping in line with what would have happened otherwise anyway. So there are green shoots. Whether that is conclusive enough, I'm not of the belief or of the view that one needs to rush out and pound the table and say that the worst is over. I still think there's a lot of room left for disappointments by way of various policy measures and stimuli measures that have been announced across the world. We need to see all those play out.
The other big question which people are asking, if they're not talking about the upsides, but whether we have seen or we are forming some kind of a bottom around that 8,000 Sensex mark or 2,500 Nifty. Do you think you can say with any degree of confidence that that is a reasonable bottom, which around the October-November lows, which should not get violated this year?
I wouldn't be so brave as to say that, to be absolutely honest. Each time the market will stage a rally, it will seem as if the previous lows, will never be reached. Just as conversely, in a bull market, each time the market used to sell off, and it used to be brutal when the sell-offs used to occur. And let's recall, from 12,000 we would go to 8,000, from 16 we'll go to 12,000, all in a matter of, 3 weeks, 4 weeks, 6 weeks time. And it would seem that that top would be never conquered, and the markets, when it was in a certain trend, kept conquering that. So, I don't want to stick out my neck and say that the lows are in place and that they won't get violated. Merely because I still do see a lot of problems ahead for the global markets, and to believe that all these problems, the collapse in global trade, etc., is just going to vanish, in a matter of 3 months' time, I think that's still wishful thinking.
The fabric of this bear market rally has been global in nature, Shankar. How much importance or weight would you accord to the elections and the outcome of that for the market?
Oh, there would be a significant amount of weight we need to attach to it. That said, I'm a big novice in political analysis, but my analysis, for whatever it is, tells me that there appears to be enough evidence to suggest that the same dispensation comes back, the same formation, give or take a few allies here or there, would come back. In which case, that's good news, for the market. But that's still some distance away. I think there will be more things to ponder over in the intervening, month and a half or 2 months. So, that's still, distance away. I think the same formation comes back, but I wouldn't want to play the market based on that scenario occurring, because it's a very data-based, market that we are seeing right now, announcement-based, and a lot of things can happen in 2 months. That's going to be a long, long period to navigate.
What do you think will drive global and local markets in the next 3 to 6 months, Shankar? Do you think it will finally boil down to earnings and valuations once again, which are fundamental issues? Or do you think technicals will have a big role to play? The fact that globally everybody's been fairly risk-averse, have been sitting on piles of cash, and now some of that cash might be deployed because people could be chasing performance. Which do you think will be more important in determining the extent of the moves in the next 3-6 months?
I mean, fundamentally, my belief has been that valuations don't really make bull markets. What makes bull markets is momentum. And, and that's the one thing that I've seen work across 100 years of market history. Valuation, we'll know something is cheap only in hindsight, that markets were cheap in May 2003 or markets were cheap in August of 1998. There's no saying that this cheap today will remain cheap or won't get cheaper. So it's only after a year's performance we can look back and say that was a great point to buy. But what takes the market from those low points to a high point is pure momentum. We've seen momentum come back, stronger than what it's been in the last 12-14 months. So this was due. There was a big rally due. It was in the works. It's happened now, and obviously, a lot of people will justify the rally based on the green shoots that we are talking about. So momentum money will come back. Emerging markets, which are the classic momentum asset class, have seen inflows come in. India has seen inflows come in. I think that's not valuation based. It's purely the markets are making the money come in, which is what I always say, that markets will create liquidity. Liquidity won't create markets. So you're right. I think the technicals of it, in terms of the pure momentum rather than fundamentals changing markedly for the better. I doubt if that's going to be the situation. I think momentum will actually be the bigger way in which we can predict markets this year.
Do you think most people might be surprised by the quantum of this pullback rally, Shankar? Because they have in the past week or so, or was this coming and this is probably going to be where the pullback will end at?
That's a tough one. I do think you are somewhere, in the range where it should, at least take a breather, if not altogether reverse. It's going to be a very painful thing to resist jumping into the markets, and that's the nature of all these markets, that they will compel you to do the trade that you should not be doing. But it'll be very few people who will be able to resist the temptation of jumping in, both feet in. I'd suggest that even if you do believe that the green shoots are going to become a whole forest of greenery, just hold your sort of ammo for a while. Let's see how the next few days play out. Because, I don't think the market is going to double in a matter of 3 weeks' time. So, it has to take a breather. I think it's due for a breather. Let's see how the quality of the pullback is. And then we can reassess the entire situation. Getting in now, would be really, becoming a complete novice in this business. That you were the last guy in and they sold you all their junk. That's the way usually these things end.
But as pullbacks go in some of the beaten down sectors like commodities particularly and the banks, would you have reason to believe that there could be more juice left in the pullback, or with their current 30 to 50% rallies that you've seen already, you're sort of done with the pullbacks in the most beaten down sectors, which have rallied the most?
I think 50% is a great rally by any standards. And remember, these are not penny stocks; these are reasonably large stocks with large capitalization. So to expect them to absolutely double, especially our sort of banks, etc., they never became Citigroups or some of the other US banks would come down to really penny stock levels. So from $1.50 you can go to $3. I mean, none of our banks are 5 rupees which have gone to 10 rupees. So this is a pretty sizable move already behind us, and the incremental move will be a lot tougher if it were to come at all. So I think you really have to keep your powder dry and wait for a pullback. See if the pullback is so ferocious that it reverses the entire gains, or that if it's a mild pullback, then it tells you clearly that there is some more room left in this rally. But jumping in now is treacherous, absolutely treacherous, no doubt about it.
Always good speaking with you, Shankar. I hope at least for a bit the market retains the color of your tie. Thanks for stopping by today. Shankar Sharma, First Global, with his thoughts on the market. Let's take a break. Yes, always green.